Hi everyone, we're back, and this week we continue our review of English football's independent regulator, following on from our video last week, which discussed certain topics of what's being suggested around the regulator. This week we're going to look at the regulator in practice, looking at the guarantees it can make around future football failures, and suggesting some improvements that the regulator, or English football as a whole, can simply introduce to benefit the industry. As a recap, football's independent regulator in England is going to be a financial sustainability regulator. It's not going to look to restrict club competitions or create a level playing field financially. That is the job of the leagues. So the regulator will not be able to guarantee that there will be zero future financial failures in English football. It would be almost impossible for it to do so. Because as much as it would like to be able to govern and regulate English football, there will always be casualties through mismanagement or potentially error or even fraud, for example. When it comes to breakaway competitions, it has the power to be able to restrict these. However, if a club decides it no longer wants to be a part of the English football system, it could join a breakaway league. It will be prevented from doing so and competing in any domestic competitions. Let's take a look at how financial distributions currently work and how the regulator would propose to fix them. Revenues in English football have grown from 260 million in 1991-92, the season before the Premier League was formed, all the way up to £6 billion in the season 2021. English football's growth has outstripped the competition all across Europe, and it's a fantastic testimony to the commercial success that is English football. And it's primarily been driven by the Premier League. The white paper acknowledges that clubs must do more around controlling costs, and that the current financial distribution is uneven and creates a disparity across the English game. Approximately 83% of the revenue that's generated by the 4 top divisions across Europe sits within the Premier League. In 1993, that statistic stood at 57%. So over time, the financial distributions have been more weighted towards the richer clubs. The divisional disparity in revenue distribution creates what are described as cliff edges in the white paper. From the Premier League to the Championship, from the Championship to League One, and even from League One to League Two. Parachute payments are put in place between the different divisions, which essentially are there to soften the blow of relegation. However, it's common that those clubs with parachute payments have a financial advantage over others in the league and can go straight back up. Other clubs have to take a financial gamble to be able to compete with those that receive parachute payments. So already those payments that are intended to soften the blow and make that transition easier are providing a competitive advantage to other clubs within that division. As mentioned last week, the regulator's view on this is that football should find a resolution, but the regulator will step in if a resolution cannot be reached, and mediate between the parties being the Premier League and the EFL to reach an agreement. When it comes to the regulator working in practice, there are 4 key elements we need to consider. The first being monitoring and reporting. Similarly to the setup in UEFA and the Premier League, this club licensing system that will be put in place by the regulator will have continual monitoring and club reporting obligations. So there will be a continual information flow from the club into the regulator. The second being advocacy. If the regulator believes that a club is going to breach the rules or the licensing conditions, the regulator will work or look to work with the club to try to sort the issue. Punishment won't be the first step. The third step being enforcement. If thresholds are being triggered, the regulator will step in to try to enforce compliance. This could include appointing skilled personnel in the eyes of the regulator to report on and improve the club's operations. The fourth and final step that will be taken by the regulator is disqualification. What's described as persistent, flagrant and willful non-compliance will lead to disqualification of the personnel responsible for running the football club. That's in the event that the league fails to disqualify the directors. And the regulator will have the power to appoint third-party trustees to run the club. Ultimate sanctions for non-compliance from the regulator include reputational sanctions. Financial penalties could be imposed by the regulator. However, penalties on a club that is already struggling financially might be a last resort. The regulator may fine the individuals responsible for running the club. Second to last, suspension of the individuals responsible for running the club. That could be from running the specific club or from football in England as a whole. And finally, as a last resort, suspension of the club or withdrawal of the licence. The regulator will not have the power to deduct points. That power will remain with the leagues. And it may also not use financial penalties because that may not deter wealthy clubs. As you can see, this matter is extremely complex, and the task of the regulator of balancing the long-term sustainability of the football industry alongside controlling spending and ensuring financial good management is a tricky task. Are there any simple ways that the industry or the regulator could improve this process without significant cost or regulation? Well, here are some thoughts from us. First of all, disclosure. If we look at limited companies and what they're required to disclose, they're governed by the Companies Act. Some companies, and it's very limited in the case of football, are listed on stock exchanges. Those clubs that are listed on stock exchanges are required by law to improve their level of disclosure. So if we look at Manchester United's disclosure, for example, it's much greater and in more depth than you'll see in any privately owned club. Quite simply, clubs will not disclose more information than they're required to do. So could the regulator put in place a special status for football clubs, which requires football clubs to take on a specific legal entity that could still be for profit in its current legal form, but enhances the level of disclosure by law if a football club or football activities were being performed as part of that legal entity? It seems simple to me. But an enhanced level of disclosure around cash flows, around obligations, off-balance sheet obligations, potentially FFP submissions, or other elements around the financial sustainability of a football club could go a long way in improving transparency and creating a level playing field of information that's distributed to stakeholders, fans, and interested parties. A second thought that we had at Football Finance Professionals is consistency of rules across leagues. At present, the Premier League rules and the rules across the EFL Championship, League One and League Two differ. They're written by separate organisations, being the Premier League and the EFL, and different levels of financial rules apply across all of the leagues. That's only across English football. So we're already talking about different sets of rules. So the transition between the Premier League and the EFL, or vice versa, or even from League Two to League One into the Championship, can be quite complex when it comes to understanding the financial regulations. So consistency of regulations across the pyramid from an FFP perspective would be extremely helpful. Different levels of allowable losses could be administered, but the core rules would be the same. We'd go one step further and try to create consistency across Europe, if not the world. A global standard for FFP, an IFRS of the world of FFP. Accounting has tried to shift from specific jurisdictions, being UK GAAP, to IFRS, or an equivalent of IFRS. And football, we believe, should move to a consistent level of regulation. That could create a level playing field across Europe, which may or may not be the desire of the regulator, but at least everyone would be playing by the same rule book. This is an enormous task to get multiple stakeholders on board, but across the domestic game, it should be doable. Agreement with the Premier League and the EFL to apply a consistent set of rules. The government has noted in its white paper that the golden share doesn't seem to be appropriate for all clubs. This would only be applicable to legal entities that take on the form of community benefit societies. And as we know, the majority of football clubs are privately owned limited companies. Community benefit societies would not be allowed to distribute profits, and so this would be a significant challenge. But a specific status around the disclosure of financial information should be a relatively easy change. Central organisations such as the Premier League, the EFL, or even the FA, or even at a last resort, the regulator, could act as a central treasury function for the country. What would this mean? Funds could be held centrally, in a similar way that central funds are held for the Premier League broadcasting deals, for example. But these are distributed out to each club. And rather than distribute them on a gross basis, the treasury function could distribute on a net basis, meaning that one club is owed, let's say, for example, £100 million in broadcast revenue. Instead of distributing £100 million to that club, the central treasury function, let's say, for example, it could be the Premier League, would look at the amounts owed by that club to other parties and withhold that amount. The Premier League already has the power to deduct in certain circumstances, so that power could be broadened and distributions be given on a net basis to make sure that the other distributions are made to other clubs, which again would be calculated on a net basis. That would take into account any monies due on a broadcast deal, less any monies due to other clubs. And if you were on a net paying basis, you would have to pay the league, which is what happens already. It's just that the distribution of funds isn't done by taking into account your liabilities. It would be a complex change, but one that could definitely benefit the clubs involved. Rather than having control of their whole cash flows, they'd effectively be restricted with the amount of cash that they would receive. One final thought that we had around cash distribution and distribution of funds is around controlling an element of the broadcasting deal and restricting what that money could be spent on. For example, the Premier League's broadcasting mechanism has different elements to it. They can be split up. So for example, the equal share basis of the broadcasting deal from the Premier League could be freely available to be spent by clubs on whatever they see fit. The merit-based payment, which pays more to clubs for more successful performance, could be restricted. And that theoretical restriction could be that the merit-based payments are restricted when it comes to the next transfer window, and only the equal share could be invested in future. Another way to encourage financial sustainability for football is for owners to pledge an amount of cash as a bond or alternative. Any bonds that could generate interest that would be pledged at the point of acquisition could be reinvested into grassroots football. But that fund could sit there as a safety net to help bail out clubs that enter financial difficulties. That could have the impact of discouraging overspending, but could also go the opposite way. Knowing that there's a safety net there may encourage riskier strategies. But what are your thoughts on the independent regulator? How could football regulate itself? Please leave your comments down below. If you like the video, hit like, subscribe for more. My name's Neil Wood and I'm a football finance professional.